So you wanted to become a day trader, and despite the well wishes from your friends and family, at least in the beginning, no one believed you could actually make it as a day trader. Why? Because your premise of becoming a day trader is to make a whole lot of money. Of course, no one believes that you can make a whole lot of money in the markets, right? And that's why we have Discord communities, right? So we can gather around like-minded people and we can, circle jerk each other's foreskins and say, hey, you can do it. But no one really has a solid strategy and no one really addresses the elephant in the room. You see, the market is built upon the most powerful human emotion, which is fear, and the most powerful element of fear, which is fear of the unknown. And because of that, a lot of traders come in with, I'm going to make so much money, but then they come out with, why did I chase that candle? So I'm going to show you some things that you could do to make your trading more uniform in the same way we drive on the right side of the road and allow you to be profitable. So let's get to it. One of the things I like to utilize is something called the choppiness indicator or ChopX, one or the other. Now, this is a different spin on identifying chop. This here basically tells you, hey, if we're trending up, it's chop. You see here, if it's trending down, it's strength, right? It's almost dyslexic. Whereas if we use one of my favorite indicators, it's a personal indicator, ChopX. Well, that's the wrong one. Put this ChopX here. Let's delete this one. And let's get the choppiness indicator out of here. But what this is telling you is we're losing strength here. And we're consolidating. Yellow means consolidation. And then green means we're gaining strength, right? It's a very, very, very simple visualization on strength of the move. And I'm giving this indicator away for free. So all you would have to do is slap on a super trend, know where your trend is, use ChopX and know the strength of the move, and hold off from taking trades until you see their strength and momentum. This is free game here, guys. Take advantage of it. Otherwise, you can check me out at trade1348.com or Dave Trades. Either or, if you listen to me, I'll make you a better trader. Coming back to this, we're seeing what we call the opening range. And this is something that I plot every single day, not necessarily on my charts, but in my mind. And what we have here is this somewhat transparent watermark. And this accounts for the first 15 minutes of the market, letting me know don't bother chasing and don't bother trading. This right here gives us and establishes our opening range. And our opening range for NQ is going to be 173 points. That's our opening range. Now, my system clearly told me, hey, you could enter here at 8:50, or you can enter here at 9:30. Here's the deal. I drive on the right side of the road. And so do you. We drive on the right side of the road. There's uniformity in that. Now, I remember going to St. Thomas, getting out of the airport, jumping in a car. Wheels still on the left side. And I go ahead and start driving on the right side of the road. And I see this van full of chicken and eggs coming right at me, honking at me. I'm like, what? Anybody who's ever been to St. Thomas, let me know. Megan's Bay, Top 5 Beach. You love it. And I quickly had to make that adjustment. And I said, oh, but through tendency, I assumed uniformity. And in order to become a better trader, and this is why there's such thing as paper trading, and why you as a trader just abuse the very mechanism of paper trading, because you're not seeking uniformity, you're seeking validation to your ego. Something you talked about yesterday, which is the elephant in the room, your ego. You use paper trading to validate whether you could be a trader or not. So you're taking risks you have no business taking, but you're holding until you see green and lots of money. Validation is the reason why when traders paper trade, they tend to do so well. And then when they get into the game, they don't do so well. So we're practicing the wrong way. So when you're paper trading, you have to practice for uniformity so that when we get into the markets, we're doing exactly the same thing. Remember, consistency here, guys. So I can't expect the market to do anything different than what I would already know it to do. And in this case, I can't expect the market to be bullish if we're trending below a super trend line and we're below VWAP. I cannot assume a bounce or an exit or an entry unless I'm signaled an exit or an entry. This is really, really, really important. This is why I've developed the system in 1348. So you as a trader can develop a sense of uniformity and structure in your trading so that you have a trump card over fear. That is so important, you guys. When I take trades, I'm cool as a cucumber. I don't fear anything. My spats, my spats with individuals in the comment section. Yeah. But my stats speak for themselves here. 72% trader at 3-1. All right. This is a trading career. Okay. And so what we're going to do here is wait for an opportunity to take a trade. And I trade the same way every single time, right? So I'm not going to chase into this with NQ. I could go ahead and look at what ES is doing, and it's doing very much the same thing. As I said, I don't want to chase into this, and I don't want to assume a bounce off of anything unless I'm given an indication. Now, I ever got into a car accident? It wasn't your fault, but the other driver assumed you were going to turn left because, right, maybe I left their blinker on. But you turned right into their lane. You see, so when we begin to make assumptions about what the market's going to do, we're going to end up in a wreck. So we wait for the market to signal with clarity what it's going to do. Now, coming back to this, zoom out, I can see every single day with clarity what the market's going to do. This triangle down is my primary entry. And should I miss, I'm signaled another entry with an exit. Should I miss this, I'm signaled another entry with an exit. And I do not assume a contrarian position. The contrarians. Let's talk. You guys let me know who you are in the comment section. The contrarians. Those who sit there and see the market just bleeding and hemorrhaging and dying, and yet insists that it's going to resuscitate the market by their fucking selves. This is mind-blowing. So if the market is a vote in a popularity contest and you have thousands, algos, institutions, day traders all saying, fuck, we're selling, you're going to go ahead and catch the goddamn knife and say, no, we're buying. It's a great opportunity to buy. Let me explain to you a great opportunity to buy. The great opportunity to buy is, of course, a reversion back to VWAP, but upon a signal. And I could show you what that looks like, right? This is a reversion back to VWAP upon a signal. If you insist on being a contrarian trader, that's what you're looking for. Alternatively, what bulls were looking for the whole time here was a break above VWAP, and that would establish a bullish thesis. However, the bears ate, and the bears were in control. As a trader, you have to conquer your bias. You have to conquer the notion of, I'm going to buy in now. And it's very easy to get caught up in that because naturally, coming into the markets, we have this idea of buy low and sell high. This makes absolute sense. I mean, tell a toddler make some money and they're going to do their best to buy low, sell high, even they understand the concept. That in itself is innately human because we are harvesters of limited resources. That's what we are as humans, harvesters of limited resources. So how we attain those limited resources, right? Through accumulation. And how do we accumulate? Through transaction, through hard work and labor, right? But through transaction, at least in the modern times, is through transaction. So buy low, sell high. And this is what compels a trader to constantly go against the trend, because the idea here is, I could get such a great deal here. And then they'll average down. I could get more of a deal here. And then they'll average down. I spend less time looking for deals and spend more time looking for people to sell to. Interesting notion, right? Let me explain. You get back to this here. We're looking for people to sell to. And so people are looking for people to sell to. And if we know that it is human, it is innately human to want to buy low, sell high. And well, not everybody has the edge that we have at Trade 1348. So if the market's bullish, well, where do you think all the buyers are? They're on the bull side, ready to buy, right? What you're looking for are buyers, and buyers step in when there's bullish sentiment, right? So if your goal is to make money, you got to be where the buyers are. Where we're at currently, where the sellers are at. This is where the sellers are. The sellers are selling. And if you're buying, you're becoming exit liquidity for institutions. Not fair at all. Absolutely not fair. You are a contrarian. Put on your seatbelt, man. Just slow it down and wait for the buyers to come in, because once the buyers come in, that's all they do is buy, because they're looking to buy and sell higher, buy and sell higher. This is FOMO, right? Let everybody else act out FOMO. You act out your strategy. You know where the buyers are. So that's why I'm just chilling here. Now we have a break of this level here. This is yes. I'm gonna go ahead and look at NQ really quickly and see what's happening here at NQ. And what I'm looking at is, the cheaper this gets, once the buyers step in, the more money I could make. But as long as the bears are in control, is the more money I could lose. And so I'm really, really sorry for this super long video that really didn't prompt much action from the market. But again, I have my rules. I have my strategy. I know what I'm looking for. I don't chase, and I manage myself. And guys, each and every day, the goal isn't to make the most amount of money. The goal is to redefine who you are and to become a better trader. My system here, shameless plug, is going to help you do just that, because we're able to articulate every moment in the chart to give you that competitive edge, to let you know when the buyers are coming in. And wow, just when I was about to conclude this video, we have an X, and there's no better time than to show off my system than to wait for this X to close. Key word here is close. We gotta wait for it to close. We have 10 seconds on the candle, and then I'm going in. 4, 3, 2, 1. Here we go. I'm going to go long. I'm long. I have a close here. This is an exit. So therefore, opposite of an exit is an entry. And if we look here, we're up $200. Remember what my goal is, because my average is 300. So there we go. We got an average of 300. We're well above that average. We're at 400 and change. I'll go ahead, because this is extremely volatile here. The NQ is just that. It is volatile. So here we go. We see this level here. I want you guys to pay attention to this level. We break this level, then I could go to break even. Otherwise, you know what? I can just simply flatten my position and secure the bag, and then wait to see if I break above this level. That's how you trade. I can break even, remove my risk, or I can secure the bag and look for a valid point to re-enter the trade. This here, I waited all morning for this to pop up just so I could make my 300 bucks. Here we are. We're at 47.97, almost 4,800 bucks. And I will wait for a break of that level here at 22,921 and my green band, a nice developed green band. And I will ride this trend until I'm told to exit once again. Oh, you guys didn't think I was going to let you go without showing you what happened. And again, trusting my trend. Remember how we talked about buyers? There's buyers here. If I want to sell, I need buyers, right? And what that means is I can scalp and know that this thing is trending up and I can pass my eval. That's it, guys.